Have you ever wanted to discover what it means to be a real estate developer? Well, check us out today on Money Match on one of Canada's best real estate developers. Hey, welcome back to Money Match. I am joined together today with John Courtliff. John is the CEO of ICM Asset Management and also the lead portfolio manager of Property Partners Trust, which is a fund we will be discussing today. John, welcome to the show.
Thanks very much for having me in.
John, I have to tell you, I'm a big fan. So thanks for honoring us and hanging out with us today.
I really appreciate the opportunity to chat with you, Ian, as always.
John, I've been kind of connected to ICM since 2016, and my father was actually connected with you guys since 2011, 2012, you guys have been a great business partner in managing our clients' money. So thank you for all that you do.
It's an honor to be able to manage people's money and look after what they've worked so hard to earn. So appreciate your partnership as well.
John, today I'm wondering if you can just give us an elevator pitch of, who is ICM and ultimately, what is the Property Partners Trust, specifically your kind of flagship primary fund that you guys manage at ICM?
Yeah, ICM is an alternative investment manager. We're a Calgary-based firm, which in and of itself makes us a little bit unique in the Canadian capital markets. But we look after investment portfolios focused primarily on real estate, and we are investors in real estate across North America, in not only Canada but also more heavily in the U.S. and down into Mexico as well. So we invest really across all property types, very often partnering with third-party operators or developers to try to maximize the returns that we're able to earn in different markets and in different property types.
Awesome. And one of the things I think is very unique to the way you guys operate is a lot of other real estate projects that we partner with are typically multi-residential long-term hold REITs that buy residential properties, and their intention is to hold them semi-indefinitely. And so I'm wondering if you can speak to, how does ICM differ in that marketplace? Are you a multifamily REIT, or what are you exactly in comparison to that kind of real estate play?
Yeah, we're quite different in that respect. We've got a couple of $1 billion of assets under management, and we have pretty high turnover in each year within the portfolio or within our AUM. And the reason ultimately that is because we do look for opportunities to trade out of assets and redeploy where we think there's better opportunity to make money. So we aren't just a buy and hold strategy. We are active within our portfolio and continually looking to reallocate the portfolio across different property types and different markets as we see the opportunity set changing over time.
Thanks, John. I think one of the things that I think is so unique about you guys is that it allows a retail investor, such as myself and such as the clients that we work with, to jump involved in what I'd call institutional grade development projects. So they get to participate passively with a real estate development projects in a diversified way. And so I'm wondering, just for basic terminology or basic understanding, what does a life cycle look like on a development project? Like, what does a shovel-ready project mean, and what would that life cycle be like for a project?
Yeah, it's a great question. I mean, if you look at Property Partners Trust, the portfolio right now is, and generally going forward as well, is likely to remain split about 50% in existing income producing assets and about 50% in development projects. And development projects that we own interests in, are at varying stages of their life cycle. So within that 50% allocation to development are land positions that are still working their way through final entitlements. There are projects that are under construction and still with a fair amount of construction left to complete. And there are projects that are nearing completion or complete construction and leasing up. And at that point, once a project is leasing up, there's a point at which it transitions into being an income producing asset. So within our portfolio, we actively look to finish construction, stabilize assets, and then reassess whether we want to continue to hold that particular asset in the portfolio or whether we trade out of that asset. So that's where we're continually turning through a portion of the portfolio and redeploying capital. And we're not incentivized to churn in the portfolio. We are shoulder to shoulder, basically, investors with the clients in Property Partners Trust. So we're doing it truly because we feel that that's the best thing to do for the capital and for our returns. Development projects are quite varied, and you know their life cycle can be quite different. An industrial, from being shovel ready, an industrial project can be complete and you can be in a position to sell an asset within 18 months in many cases, you know, because the complexity of building, you know, a shed, as industrial properties are sometimes called, is much less than building an apartment building. So, you know, your development cycle to the time that you're ready to trade out of a property can be less than 2 years to upwards of 5 years if you've got, you know, quite a complex project, and it's going to take longer to lease up. So the time range differs, but within Property Partners Trust and our portfolio, what that means is there are always different projects anticipated to be delivered in each quarter, basically, is what we're aiming for. And we assess that as well as we look at new investments to continually have activity within the portfolio that give us opportunities to look at trading out of assets and reinvesting as well.
That's awesome, John. Thank you. I'm going to make some observations on some things, and I'm wondering if you can speak to them in terms of past investment performance, if I want to call it that. You know, one of the things that if someone was to look at your annual returns over since the start of PPT, or Property Partners Trust, which began in 2018, all the way through to today, there's kind of an interesting phenomenon going on. You had kind of a stabilized growth pattern between 2018 all the way through to 2021 that was, you know, for all intents and purposes, a reasonable return, but in the world of private equity, not all that, you know, exciting, you know, in the mid sixes, let's say. And then, you know, all of a sudden in 2022, you posted this is a very, very attractive jump up in valuation. You know, last year in 2022, you delivered a 13.66% return, which is, you know, if you compare that with a market, like a public market comparative, you know, that was outstanding. And then you know, your 3-year rolling average was, you know, 8.19. And so again, we see this wonderful trend upwards. And so one might scratch their head, was it a one-off? Was that maybe just a beautiful, like, oh man, we had a great year, but, and again, obviously you're not going to sit on this call and guarantee anything. But what I would say is that I think there's certain market drivers in the fund as you've onboarded certain development projects. And now you have this cycle of development projects that are coming to maturity that are adding tremendous value to the portfolio, not only in 2022, but in 2023 and a go-forward basis. I'm wondering if you can speak to that.
Yeah, I mean, I can guarantee that we try to make good investment decisions. You know, it's you know, you're right. The first few years of Property Partners Trust was really about establishing the portfolio and hitting a scale where there were sufficient number of projects in the fund that you know, we'd reach a stage eventually, like we did last year, and what will continue is the continual delivery, if you will, of these projects on a quarterly basis that allow us to crystallize within the fund's value the difference that opens up between a project that is under development and ultimately complete. We have what we feel is quite a conservative valuation methodology, and what that meant through to the beginning of 2022 is that, yeah, while we had some projects delivering and some of those gains being realized, it was pretty modest as a percentage of the portfolio. Whereas in 2022, we began to see the delivery of a more substantial number of projects, and that is set to continue into 2023 and beyond. So we should start to see, a more significant number of projects reaching a point in their life cycle where there's a greater likelihood of valuation increase as those projects finish construction, begin to lease up, and eventually reach stabilization.
John, thank you for your leadership here. It's very attractive. Just curious, just in terms of taxation, if clients were wanting to utilize ICM from an income standpoint, and they were to utilize unregistered dollars, talk to me about, obviously they have their gross return, they have a unit value that would grow theoretically, and in terms of there's a cash on cash distribution. What is ICM's goal from an annualized cash distribution perspective, and how is that treated from a taxation standpoint, or the intent from a taxation standpoint?
It'll vary in each year depending on what happens in the underlying portfolio and any dispositions or realizations within the portfolio. But generally, ICM Property Partners Trust is quite a tax efficient vehicle for investors because as with any property investment, there's depreciation and amortization, which largely offsets the gains, if you will, that would otherwise be realized on existing property. In addition to that, because we're investing outside of Canada into the US and into Mexico, any dispositions that we have outside of the country are ultimately subject to foreign taxes. And ICM Property Partners Trust pays those foreign taxes on behalf of investors. And so the returns, the distributions, and the unit price growth that investors see is actually a net of tax return, because at least on the component of the portfolio that's invested outside of Canada, because the trust is ultimately paid those foreign withholding taxes, and the benefit of those foreign taxes having been paid for investors does flow through to the investors via a withholding tax credit that offsets the income tax that they would ultimately owe in Canada. So the gross returns are still realized by investors, but the distribution, the cash on cash distribution you reference, as well as the unit price growth that investors have seen over the years, is actually a net of tax return, which actually makes us a little bit different than many other groups in Canada.
And so, just from a percentage standpoint, what is the target?
We're looking to generate for investors sort of an 8 to 10% return on an annualized basis, and as you kind of mentioned earlier, we're right in that range over the fund's life cycle, and
from a cash distribution standpoint, what's the target?
It's in sort of the 5 to 6% range.
I'm wondering if I can end with this last question. Why ICM? If I'm a prospective investor or even a current investor, why should a client invest and trust you with their capital? What's behind ICM? Why ICM?
Yeah, I mean, ultimately, ICM's been in business for a long time now. The firm has been around for about 20 years, and as you noted earlier, Ian, I mean, we've been working with you and your dad for over a decade at this point. So I think that there's a high degree of trust that we've built, and that trust was able to be built really on the foundation of ICM's principles, and those principles ultimately include transparency and being forthright about what's happening at any given point in time in the real estate cycle or within the funds that we manage, and so on and so forth. So why ICM? Because ultimately we are a trusted partner to those that we do business with, and we aim to be so going forward.
John, thank you for your time today, sir. So appreciate you, and look forward to connecting with you sometime soon.
Absolutely, Ian. Appreciate it.
For those of you who listen today, thanks for joining us. If you ever have questions, don't hesitate to reach out. We're here to help.